today with my fascinating guest, Dorie Wiley. And Dorie, I want you to tell our folks you're into so many things. I'm going to forget one. And tell us what you think about the current markets and maybe the Fed chair nomination. And just tell us how you see things in the country right now financially.
Sure. Well, last week was really interesting. We had the Mag 7, all these big tech software companies all really sell off big.
Yes.
Some of them down 90%, 70% off their highs, 40%. NVIDIA's off 18% of its highs. Big drop in these companies. Now, the Dow just hit a new high over 50,000. S&P pretty much the same. So what we're seeing, though, is actually some good things because we had some hard sector rotation combined with deleveraging in some of those tech names. And I think it'll be better for the market. If you look through the previous year from January of 25 through November, 88% of the return of the S&P was from the top 100 names.
Really? That's interesting.
From November to now, 75% of the return of the S&P is from the bottom 400. So now we have more breadth, and banks rallied really well, and they needed to because banks were trading anywhere, particularly small cap, micro cap banks, from 9 to 12 times earnings versus, all these tech companies trading at, 30 to 80 times earnings. Now, it doesn't mean a lot of these big tech names aren't still good. Anytime you have a company like NVIDIA with 50% margins and 100% return on equity and 50% growth rate, those are still good numbers. It doesn't mean that stock should be down. It just means that there was some profit taking, deleveraging, and sector rotation, and recognition of value in other areas. So I'm optimistic about the market for this year. I think we'll have double-digit earnings growth.
Good.
We should have a good 7 to 8% growth in revenues, and even without an expansion in multiples in private equity or price to earnings ratios, that's still 11 to 12% return on the market. So if you're in the right sectors, you may even get more. Trying to figure out what the right sectors are, that's always a challenge. But that's why you diversify, right? But we did get a new chairman named Kevin Warsh. He was on the Fed board in the financial crisis.
Oh, wow.
And there's a little bit of irony to appointing him because he was in favor of delevering the balance sheet, whereas Trump was kind of wanting to increase the balance sheet of the Fed and buy longer-term mortgages or longer-term bonds in order to get mortgage rates down a bit. But I think Kevin thinks we can get there by delevering the balance sheet. Now, that'll remain to be proven. We will see. He's only one of 12, so I think people don't need to get too carried away about him being political choice of Trump. Yeah. And the other irony is he's known as an inflation hawk, so I don't think he's going to lower rates when he's worried about inflation. Now, he could be wrong about worrying about inflation, but he's a hawk on inflation. He does seem to think that there's room to lower rates a little bit.
Oh, that's good.
So even if they lower rates 25 or 50 basis points, we're not going to see a huge change. Personally, I like to see them stay the way they are. Banks are doing fine. Economy's doing fine. Let's get unemployment, upward where we can be. I'm not worried about a 4.5% unemployment going to 5%.
Right.
I worry about it going to 15 or 12. That's when I get worried about it.
Yeah.
It's inflation that is the bigger worry. That a lot of the rhetoric out of the Fed has been more worried about the unemployment rate lately, which kind of concerns me that they're looking for an excuse almost to lower rates, maybe placate the president or whatnot, whatever the motive is. I think they just need to be careful with that because as long as we have a deficit that's out of control, then you're just throwing matches in the hay barn at inflation.
Yeah.
And if it ignites, you can't get that genie back in the bottle. It'll become Venezuela. So, I tell people most countries have massive debt that they shouldn't have, and we do too. We just seem to be the prettiest horse at the glue factory. Pardon me for
the. That's a good one. I like that.
That's not very politically correct, but that's sort of the way it is. We really need to get a handle on it. One way is to start with the fraud. I mean, the Doge and Elon Musk uncovered a lot of that. They're saying that at least $250 billion a year in fraud out of our budget. Elon says it's closer to $600 billion.
Wow.
Imagine if we could get rid of that.
Yes.
Imagine if people cared about honor and a moral code and fiscal responsibility rather than just looking the other way or getting bribed or stealing, whatever they're doing. That's a real shame. That's a real shame because, we all work really hard. There's a lot of people work really hard. And I think Tax Freedom Day, the day you work until you're actually working for yourself.
That's right.
It's getting closer to July now.
Oh, gosh.
So,
that's crazy.
Then that means we're all just slaves until then.
Oh, I don't like that. So I know you don't have a crystal ball, but if you had a crystal ball, what do you think how do you think the Supreme Court's going to rule on the tariffs?
On the tariffs?
Yeah.
I think there's a good case to rule in Trump's favor on that, where that's going to be okay. I think that'll be good. The tariffs thing seems to be working just fine.
Yeah.
And of course, there's many small companies that depend on supply chains over in the Far East that are not fine, and it is affecting them. But, I remember being on CNBC maybe 2021 or 2020 or something when the COVID first started.
Yeah.
And I was kind of admonishing Nike and Motorola and some of these companies that their whole supply chain was China. And I'm like, that's poor CEO management.
Yeah. No redundancy
You
there.
should diversify your supply chains just like you would in an investment portfolio so that you don't put your whole company at risk.
Mm-hmm.
And if that's your whole supply chain or where most of it comes from, and then we wind up in an economic war, i.e. or tariff war with some of these people, you can't go crying to the government and say, oh, you messed us up, and then go try to bribe congressmen to get it. I mean, there's no honor in that. You mismanaged it.
Mm-hmm.
And, here we are 5 years later, and some companies are still struggling with that.
Mm-hmm.
Some did a good job and diversified, in Indonesia, Vietnam, India. There's plenty of places to diversify into.
And Trump's moving a lot of stuff back to the U.S., which to me seems like a good idea. How do you see the ramifications of that being?
A lot of this stuff is short-term stuff and national security items. We can't not have a steel industry.
Right.
We go to war, right? There are some things that we need to be able to make here and deal with here, electronics, microchips, all that kind of stuff. We can't just continue to let China steal all the stuff and have all our countries go, okay, it's all right if you do. We just want to be able to do business with you. And they're still in our technology, many of which is high-tech defense technology. And then it's used against us. So I think he's really trying to step into that both feet first. So a lot of the tariff stuff, a lot of the industry stuff, I view as some of it temporary, some of it long-term, some of it negotiating, right? Like if you look at NAFTA, we fund all of it. We fund NATO.
I know.
We fund all that, and then Europe wants to try to tell us how they want to be treated on equal footing when we write the bill. I mean, it doesn't make any sense. Trump is trying to fix the bill. And so the problem is everybody's been on the dole for a long time. So it's not just our politicians or people stealing from us here domestically, but the whole world's been doing it.
Countries and everything.
I think if we really saw the truth of all that, we'd all be in the bathroom throwing up for a couple of hours.
Yeah. And so tell us again what you're into investment banking.
So we do deals and we manage money. It's a really fun time. Deal business is really up right now. Banks are very, very busy. We did a very large transaction with Veritex and Huntington this year.
Nice.
Just to smaller banks. We had a small bank in East Texas closed last Friday. Sell companies, some of them $2 to $3 to $4 million in EBITDA, up to $100 million or $1 billion energy transaction.
Wow.
So that's real busy for us on managing. We have funds that we manage. bank private equity funds, fund of funds, a couple $1 billion in SBIC private equity funds that we sponsor.
Yeah.
And then we are in the retirement business. That's what I'm most passionate about, even though it makes us the least amount of money. We'll do 401k business.
Yeah.
But we literally have the best product out there in the marketplace. There's not a plan that we can't improve out there with lower fees, lower risk, better performance on a risk return basis. And then lastly, we do what's called OCIO, or Outsourced Chief Investment Officer business.
Oh, that is
for wealthy individuals, family offices, foundations, endowments. Like I mentioned to you in a break, we're working on a project with the city of Dallas to help fix their 2 pension funds.
Oh, neat.
And that's fun. These policemen need a good retirement.
They do.
Firemen need a good retirement. The city needs, good, happy, well-paid first responders so that we're safe and we can attract business, and everything feeds on itself.
Yeah.
So.
That's quite exciting, fun stuff.
Thank you.
Yeah. Yeah. And you've been doing it for how many years?
Since the 80s.
Wow. That's a long time. I think you know what you're doing by now.
Well, I don't know. I'll just say I got a lot of letters behind my name, and a lot of education, and a lot of lessons learned. And I may not know everything, but I know a little bit.
Yeah, you know a lot. Well, thanks. Thank you. Dorie Wiley, thank you for being here today. This has been so fun, so fascinating. I don't know what subject you can't talk on. So I hope we can come back sometime and we can visit some more.
Happy to do that. Thanks for having me.
Thank you. And thank y'all for tuning in. We'll see you next time.
And